here, I'm going to be explaining to you in this video what Fibonacci is. So you're going to come over to your left-hand side and you're going to click where it says Gann. Let me hover over it. Gann and Fibonacci tools. And then you're going to see this tool here say the Fib retracement. And you're going to pull it up on your screen, okay? Now let me exactly explain to you what these are, and then we're going to talk about the settings of this, okay? Fibonacci is a series of golden ratios, okay? The market follows Fib ratios. The large institutions sometimes will come into the market and play around these levels, these percentages that you see here. The fibs add extra validity to your other confluences, such as market structure, trend lines, support and resistance, zones, those type of things. When you're using this tool, you're connecting 2 points, okay, and reading the retracement percentages between the 2 points. And I'm going to show you an example. But before we get there, let's talk about the settings. So when you first get your Fibonacci tool and you pull it up on a chart, it's not going to look like this. You have to edit the settings. So you can either click here where it says settings on the tool. This is the actual toolbox. Or you can double click and the Fib retracement is going to pop up, the settings box. All right, you can choose whether or not you want to have a trend line here. Okay, whether or not you want to extend your lines to the right, or just have the tool short like this, or extend to the left. It really is your preference. These are my settings right here. So we have the 0, the 23.6%, which these are decimals, obviously turning into percentages. And there's a setting down here for that. I'm going to show it to you. The 0.382, okay, I have this as red. I have the 23 as red. You're going to edit the color. You can edit to whatever you want it to be, but I think the color coordination helps. You have the 50%, which is not necessarily a Fib ratio. It doesn't show up in the sequence, but you know, we've noticed that price likes to play around the 50%. Every pair reacts to different levels. For example, the Euro USD, which is what we're going to be looking at today, reacts at the 50% retracement level. The 50% isn't a true retracement level, but again, price likes to play around this area, so we have it here. And it's marked off as 0.5, and I have it black for that reason. The 61.8 is one of the most common levels, and I have it as red. The 78.6, I have it right here, it's blue. The 88.6, I have it here, it's green. The 100%, which is going to be the full move, it's here is 1. The 118, okay, 1.18. The 127, 1.272. The 161.8, okay? These are my Fib settings, all right? Then you have the opportunities to add a background like this, you guys, if you want to, right? Some people have it there, okay? Some people have it like this, all right? You can add price. You can add the actual price of the currency you're looking at. I like that, so I have that there. Then you have the levels, and you can put the actual value as the decimal, or you can put it as percents. I like to keep it as percents. Then the labels here, you can put it to like the left, middle, left, bottom. Okay, you can put it in the center. You can put it off to the right. It's really up to you, okay? And you can also make templates. You can save whatever templates you want to save, okay? And then hit okay. And then that's going to be your settings. All right, so the next thing that we want to do is we want to talk about the actual swing, okay? So when you draw Fibonacci, you're going to draw from swing low to swing high to swing low, depending on if we're in an uptrend or downtrend. So let's actually go over and recap market structure real quick so that you can understand what I mean by swing, okay? Let's draw it out. So let's say we have an uptrend, okay? The market is moving in waves and is creating higher highs and higher lows and going into an uptrend. When we actually are looking to draw the Fibonacci tool, okay, we're going to find the bottom of the swing in this here uptrend. This would be defined as bullish uptrend. This market is creating higher highs and higher lows on the way up, okay? All right, so from here to here, that actually starts to swing, okay? And we're looking to measure, okay, where the market is going to retrace for more potential entries and take profits. So we will actually draw this one, swing low. Let me draw it again. Swing high to swing low, okay? And so when we look at this example, the market pulled back at the 61.8, it retraced at this level. This would have been another potential entry. And the market created another high at the 161.8. You'll see this in the market often, and this will help you determine, you know, entries and take profits. Another thing that I like to let people know about the Fib tool, especially the way that I have my settings set up, is that this 100% move, okay, from 0 to 100 is an equal measured move, okay? So if I was to clone my arrow, you would see from, from the 61.8 to the 161.8 is the same length as the 100% swing, okay? There's something really important to pay attention to, okay? All right, so I wanna give you an example again in a bearish market. Okay. Fibonacci is a really good tool to use as added confluence with, again, your other confluences. So let's look at the market, for example, in a downtrend now, right? Which would be bearish, or as defined, lower lows, creating lower lows and lower highs in the market. So when we're talking about the swing, okay, we're looking at the high creating this swing for this downtrend to the low. Okay, that's one move. Okay, you're gonna pull your Fib tool from the high to the low, and you're going to line up the 0 to 100% with this move, with the swing. Okay, you're gonna see it in live market. I'm gonna show you. All right. In this instance, with what I drew out, the market pulled back to 50%. Okay. All right. And when you see these extension levels, the 118, the 127, the 161.8, it helps you oftentimes determine your take profit areas. Okay. So past the swing, pullback, okay, take profit. You'll also see there's another tool in here that traders like to use sometime. It is, where is it? The ABCD, A, B, C, D. You'll see, you know, once you become familiar with harmonic patterns, this is what these are drawing out. Some of these are drawn out patterns and such. You'll see that these levels are made off of Fibonacci retracement levels, okay? That's a little bit more of an advanced concept. All right, so let's take a look at some of the examples of fibs in the live market. One of the things that I want to explain to you guys as to why I have this color coded in red, okay, is because typically when the market retraces to these areas, they tend to come to the 161.8. Okay. when the market pulls back and retraces to the 78.6%, you'll tend to see it come to the 127. This is a deep retracement, the 88.6. You'll see it come to the 118. So I like to teach the color code factor. And you'll see many traders have different levels in here. Sometimes they like to use the 70%. Some people will like to use the 27. It just all depends, but these are just your basic fib levels, okay? All right, so let's look at live market. All right. So a lot of the time when people are drawing fibs, you can draw fibs on any time frame, okay? Typically when you use it on a higher time frame, you'll find more setups for swing trades. When you use it on a lower time frame, such as, you know, the 30, the 45, the 15, you will be looking for smaller intraday setups. Right now we're on a 1 hour time frame because this is a time frame I like to teach on, okay? And I'm going to actually back this up to about here. All right. And let's take a look at this swing. Okay. This is a swing right here. All right. It looks like this overall market has been trending up. So let's see about this swing right here. I'm going to draw my fibs from swing high to swing low. Okay. Some people ask me, you know, do you include the wick? I do include the wick. I'm going to go to the very top boundary right here. All right. And let's see how this market played out in the Fib 2. Okay. So also the Fibonacci tool will show you, again, these retracement levels. So it would show you at, you know, when it comes to the 100%, sometimes the market will hit a reversal. And you'll see that as you tend to back test this, right? Let's look at it one more time. All right, so when we look at this, right, the market, this was the swing. The market stopped, okay, right here at the 38, okay, then kept going. Then the market turned around and pulled back to the 50%. Let's see what happens. Okay. Again, dancing around the 38. See if it's going to break that 100%. All right, boom. It also stopped at the 61. Okay, I want to pause this and I want to extend it out some more. Oops. So you can see what's happening here. Okay, so we started at the 38. We stopped at the 50. We stopped at the 61 more than once. Okay. We also stopped at the 78, which was again a deep retracement. And as I'm showing you guys, when you look at the color codes, this definitely went blue to blue. Now, long-term swing trade, we know that when we enter in for the buy here, we're essentially looking for price to come up to the 161. But this right here, to me, it represents TP1. This right here is a little bit more risky. So this right here will represent TP2. So it definitely smashed our take profit area. Let's see how many pips we're talking about here. About 90 pips, okay? Let's keep going. Price turned around, okay, hit a reversal when it tested this area twice, and then completed back this same move, okay? Right? Now, let me go to live market and see where we are right now. Okay. So, yes. Market hit a reversal, which is totally fine, right? So let's look at the swing for the reversal. Okay, so we had it in a downtrend. Okay, swing high to swing low. Okay. All right. You gotta also back test this and make sure that you understand the key here is to find the right 2 key points to draw your fibs on to find the correct levels, right? So I'm showing you examples of swing high to swing low. All right. I'm gonna show you how the market plays around at these levels. So let's see. Okay, I want to pause real quick. Nope, go ahead. All right, so the market started dancing around the 78. Okay, really started dancing around this area. All right, boom. Did y'all see that? Look at this. Okay, we had a pullback to the 78 several times, and then boom, the market hit your TP. Okay, blue to blue, 50 pips. All right. So that's just one way to do it. And, you know, depending on what kind of trader you are, like if you said a pending order, this little wick right here that hit the 61, that could have also been a potential entry. And then we had, it hit the 161. Okay, this was a better example. All right, and that right there was 105 pips. Okay. All right. Yes. I want to show you a better example in uptrend. All right. So let's use this market right here. This swing, this last swing. Okay, so I really want you to see this. Okay. Okay. Okay, we want to make sure we capture these wicks. All right. I'm putting my 100% at the top of this wick right here. Okay. I'm extend it to my right. And let's see how this played out. Let's see what a first retracement is. Okay, boom. Your first retracement is at the 68. Okay. A lot of times you could put pending orders. You can go down to the lower time frame to confirm your entry. You could put a trend line here to confirm the uptrend. You could have had a moving average, zones, whatever have you. I'm just showing you how it looks when it's in the market. So automatically, you know that your first target, okay, just off the color code, is going to be the 161. However, the safe area to take profit would be right here at the 127, right? So let's see what happens. Okay, price is retraced again to the 161 and to the 50. Okay, see if it'll break the 1. All right, then it breaks the 1. Okay. And I just want to show you guys a lot of the time, look at this. You got the 50 and the 61.8. You have the 78. You have the 88.6. The market moves in waves, which is why I was talking about creating the higher highs and higher lows. You guys are really seeing market structure play out with these fibs. Pull back again to the 78. Okay, boom. And then it's finally smashed our TP. The first one, the safe one. It slightly missed, okay? It slightly missed the first time, but then we ended up really smashing the TP. And like I said, guys, the 161, these are gonna be your longer term trades, right? Okay, and we are on the hourly, just as an example, all right? So you guys can kind of see this playing out over and over, right? So from the first point of entry, the 61 to the 161.8 was 95 pips, and this trade was like about 6 days, okay? Just like swing trades. You can use this again on a 15-minute for more intraday style trades. When it actually pulled to the 78, okay, pull back here about twice, all right? This is like holding, this is an intraday trade here, 47.3 pips. When it pulled, retraced into the green, so green to green, okay? That was 27 pips in about a day and a half. Okay, guys? So this is a really good tool to use when we're talking about taking profit, okay? Entry and taking profit. All right, let me show you one more thing. Let's go to a higher time frame, the 4 hour. All right, and I'm going to show it to you here. All right, let's look at this move here. Okay, in the uptrend, you want to make sure that the 0% is at the bottom and your 100% is at the top, because this is one swing, right? We know that we're in an uptrend, so you can have other confluences. Again, this is to line up with your confluence. You could have had, you know, a trend line drawn, right, to solidify the swing. Okay, you know you're in an uptrend. So let's see what happens. This is the 4 hour time frame. These are definitely swing trades at this point. Okay, market reverse. You had, okay, pause. Let me pull this over. Okay. You had a pullback at the 50%. Like I told you guys, Euro USD tends to pull back at this area. You start to trade, you start to see it. Here goes the one at the 61.8. So we know what our target is, but here comes TP1, right? Safe TP1, right? So let's see what happens. Okay, boom. It hit our TP1, then it hit our TP2, okay? You can really see it on a higher time frame. All right, you guys, and on Euro USD from the 50%, if that's where you wanted to enter, this was 133 pips. If you were to enter from the 61 to the 127, that was 78 pips. The 50% to the 161.8 was 117 pips. So this is just a good way to actually use this in conjunction with your confluences, okay? So, you know, price tends to get that full 100% move. Sometimes it'll reverse and sometimes it'll hit that continuation. So just keep in mind about the market structure, and I can show it to you using my indicator. Okay. All right. So price will hit, price continue to create these waves on the way up, these higher highs and higher lows. And you will see, like if I go down to the 1 hour with this same Fibonacci that I pulled on the 4-hour, you'll see price, guys. Look at how price is just swinging. That's all price is really doing. The fib is just solidifying and validating the other confluences that you have on your chart. All right, so hopefully the color code makes sense. Red to red, blue to blue for TP, and green to green. It's really simple. The key here is just drawing the fibs appropriately so that you can see how to do that, okay? And I'm gonna show you the fib settings one more time, all right? You can take a picture or a screenshot. All right. All right, you guys, I'll catch you in the next Fibonacci video.